Welcome back to Rockstock Channel. It is Monday, April 21st, and we're back for the fifth time with Craig Shesky, the CFO of the Metals Company. We highlighted the Metals Company initially in June of last year, flagging it as something different, neither lithium nor traditional hard rock mining, but a very big idea that could disrupt how we think about how to ensure critical minerals availability, profitability, and sustainability in the age of electricity, ex-China. The metals company, formerly known as Deep Green Metals, is listed on NASDAQ, ticker symbol TMC. Current stock price about $2.40, up more than 2 times since we first introduced the story last June. Current market cap is now $1.1 billion, which compares to more than $500 million the company has spent since inception 14 years ago in 2011. TMC's big idea is to scale nodule collecting from the bottom of the sea and to process such nodules onshore. For disclosure purposes, Rodney and I are strategic advisors to and hold equity interests in the metals company. We are not, of course, financial advisors, and nothing in this video should be considered investment advice. Please do your own research and read the disclaimer at the end of this video. We will flash up some graphics from TMC's updated presentation, which we've included in the show notes below. We would also encourage you to visit the Metals Company website, www.metals.co. And you could also follow the Metals Company on X at the Metals Co. and its increasingly prolific CEO, Gerard Barron, at GTB. And finally, follow the Metals Company, Gerard, and our guest, Craig Shesky, on LinkedIn. TMC has a portfolio of 3 projects over 225 square kilometers of seafloor in the Clarion Clipperton Zone in the Pacific Ocean between Hawaii and Mexico. 2 of these projects, the NORI and Tamil projects, are ranked as the number 1 and number 2 undeveloped nickel projects on the planet in terms of size and grade, and offer an attractive alternative to Russia and China supply. TMC stock began to rise in early January ahead of Trump's inauguration and continued to gain market recognition through late March, both from Trump's slew of executive orders around critical minerals and based on positive pronouncements about seafloor nodule collection from cabinet officials such as Secretary of State Marco Rubio and Secretary of Commerce Howard Lutnick.
By the way, you cannot have manufacturing without reliable and affordable energy. And so it's one of those things that I think potentially we could continue to partner along with other things, whether it's mining opportunities off the seabed. In essence, to utilize all of the resources of the country in a responsible way that protects your environment, that protects your natural beauty, but at the same time is generating income and opportunity of employment.
I don't know how much you've thought about it, but I'd be interested in just your thoughts on how you can leverage your position at Commerce and, of course, NOAA itself to expand undersea mining and resource extraction for the benefit of our economy.
It is important for American national security that the key rare earths and minerals we create ourselves. Fortunately, we have the greatest land in the world, and under our seas is the rest of whatever we don't have on land. We need to harvest it, we need to understand it, and we need to take care of America. We can. And that by the end of the Trump administration, we need to understand and protect ourselves and take care of ourselves. It is vital.
TMC then made a significant announcement in its quarterly call on March 27th. The company has formally initiated a permitting process through existing U.S. legislation, the Deep Seabed Hard Minerals Resource Act of 1980. As we discussed in our earlier videos, the metals company's story is not so much one of a challenging new technology, but more so one of permitting. Following extensive legal diligence of this 1980 Act and other applicable legislation, TMC guided that it strongly believes that the U.S. Seabed Mining Code offers the greatest probability of securing a permit for commercial recovery of deep-sea mineral resources in a timely manner. We've included a link in the show notes to the transcript of TMC's March 27th call, which Rodney will dig into as well following its introduction. In case you missed our introductory video last June, the metals company has deep-pocketed individual and corporate investors who control some 50% of the share register and continue to follow their money since 2011. After raising over $200 million as a private company, TMC went public via SPAC in September 2021, raising $138 million at $10 per share. Like most EV-themed SPACs from COVID times, the stock fell more than 90% to below $1. TMC has since raised approximately $100 million from 2022 to 2024, between 80 cents and $2, principally from its main shareholders, Allseas, Andre Kakar, and CEO Gerard Barron. TMC last raised $17.5 million in equity in November through a registered direct offering at $1 a share with a 5-year half warrant attached, exercisable at $2. TMC has sell-side coverage from Cantor, Wedbush, Think Equity, Fernleys, Water Tower, and AGP, along with price targets ranging from $3 to $6. Cantor focuses 90% of its valuation of on TMC's NORI-D project, which comprises just 22% of the company's total resources. At full run rate of 12 million tons per annum, Cantor estimates this project alone will produce 103,000 tons of nickel, 68,000 tons of copper, and 6,000 tons of cobalt by 2032, enough to supply 1.2 million EV batteries annually. Cash costs are estimated at just $2 a pound nickel, which compares to the current nickel price of around $8 a pound. Cantor highlights TMC's capital-light model, leveraging partnership agreements with marine contractor Allseas for nodule collection and Japanese smelter group PAMCO for processing nodules into saleable metal product. It forecast upfront capital of just $170 million for NORI-D and sustaining ramp-up capital of $250 million. Over an initial 25-year life, its NPV10 is $3.9 billion with an IRR of 59%. Cantor values all the rest of TMC's projects and resources at just $400 million, arriving at a $4.3 billion NAV10 valuation, more than $13 a share. It then heavily discounts this valuation by 70% to arrive at its $4.20 target price. If you have interest in the metals company and would like to see Cantor or any other research reports, please email us at rockstockchannel@rkequity.com. And with that long intro out of the way, thank you, Craig, for taking the time today for a comprehensive update before you fly to Japan tomorrow.
Oh, it's my pleasure. I always love talking to you guys, and that was a very comprehensive and great introduction. A lot of good jumping off points.
That's great. Craig, I was going to get you to do a refresh for our audience on location, size, and commodity exposure of the NORI. Howard's mentioned some of it. Can you just broadly, certainly on the commodity side, just give a breakdown of that project?
Absolutely. So I think the things that touch on are size of the resource and the grade, because that's what sets this apart. So the resources, these polymetallic nodules, little potato-sized rocks full of not just nickel, but copper, cobalt, and manganese. As Howard said, we can be profitable in a nickel market that is challenging for nearly everybody else. And I was about to say outside of Indonesia, but it's challenging in Indonesia as well, too. If you talk to the mining ministry of that country, the grade of the material coming from underneath the Indonesian rainforest has dropped from 2% to today 1.5%. In a 5 years' time, it could be closer to 1%. As grade goes down, costs go up. And as Indonesia's built out about 200, actually more, of these rotary kiln electric arc furnaces, it creates an opportunity. They need new feedstock for that. And down the road, nodules could be a part of that story. But taking a step back to answer your question, we have 1.6 billion tons of that resource that I showed you. And it's two-dimensional. It's laying on top of the seafloor. It's merely collected. So all of us being in mining, investing in the sector for a long time, this is very different than the paradigm that we're used to. It's more like picking up golf balls on a driving range than it is traditional mining. So this resource is very valuable, but it is a bulk commodity. So you roll all four metals together, post-processing, you might be looking at $350 ballpark per ton of revenue. So this is over $500 billion revenue opportunity sitting in our existing contract areas, NORI and TOML. And as Howard noted, NORI-D itself had a $6.8 billion net present value in 2021. The math done by Cantor on more of our capital light approach, which we pivoted to, is in the ballpark of $4 billion per their analysis. But again, that's just about a quarter of our total resource. So the grade of the material is what sets it apart. The grade is about 3% nickel equivalent. That's double the average grade, as I mentioned, in Indonesia. It's about 10 times higher grade than some of the sulfide projects being proposed in Australia, Canada, and elsewhere. So why did I join the metals company 4 years ago? Well, I left the buy side after being senior research analyst in charge of metals and mining at King Street Capital. And I'd never seen a resource quite this high quality, quite as abundant, and also has now, based on the $500 million of investment we put into it, proven technology, proven partnerships, a process onshore, which we don't have to outlay any CapEx for. And now we have the political appetite and the regulations through the US to get this into production in a couple of years' time. So very happy to be chatting with you guys again, and that's a great place to start.
Okay, great. Just on that, Craig, has the nodule processing strategy changed at all since we last spoke?
No. In fact, our Pacific Metals partner in Japan, we will be, as Howard mentioned, touring the facility tomorrow with, or not tomorrow, excuse me, later this week with various research analysts, as well as, potential strategic partners who want to see the on-the-ground demonstration of how we turn nodules into valuable intermediate metal products. So the processing has been known for a long time, how to do it. In fact, we proved in 2021 the efficacy of our flow sheet, developed internally, as well as with the Canadian engineering firm Hatch. And we proved that in Sudbury, Ontario, at the facilities of one of Glencore's subsidiaries. So we've known how to do this for a while. Now we've shown we have the partnership to get it done in a capital light way. To your question, has it changed? Well, the one thing that we are going to consider is in the years ahead, is there an opportunity to bring some processing to the United States? And that's one of the reasons that the Trump administration has been so vociferously in favor of this industry. But they recognize at the same time there isn't the processing infrastructure today to bring the nodules to the U.S. And nobody's built a smelter in the U.S. for the last 70 years. So there will be a bit of a breaking in period. What this administration wants to see is that these nodules or the products derived from the nodules and an ally like Japan or South Korea can be brought to the U.S. for further refining and then turning it into the valuable products needed for, autos, for ships, for planes, for everything that the U.S. is focused on reindustrializing. So we feel there is a time down the road where we can bring it to the U.S. for processing, but for right now, the plan is the same. Do it in a capital A way, bring it to existing facilities at no CapEx to TMC. And right now, that's our partnership in Japan.
Right. So now we get on to the nub of the issue, Craig, is, as I understand it, the ISA has, after 14 years, there's still no agreed upon mining code. So what is the holdup there?
Well, look, the mining code has been in development for a long time. The holdup is there are some contingents at the ISA that would love to see this take longer. I think many would recognize legally, there's no way the ISA can just stop. They have a legal mandate to deliver a mining code that allows commercial production. That was the deal agreed upon by the UN Convention of the Law of the Sea in 1982, as well as when the ISA was formed, their implementation agreement in 1994. They have to deliver a mining code to allow commercial production. Otherwise, what have we and others been spending billions of dollars on? This isn't a science project, it's a commercial project. Now, we've done more science than really anybody else combined in this industry in terms of the amount of dollars spent. Our environmental impact statement, which is now nearing completion, has cost over $200 million. Now, what that's told us is that nodules can be collected, lifted with very minimal impacts to the marine environment. But at the same time, there are others within the ISA who are countries who, want to insulate their land-based mining projects from new supply. Chile, the world's largest copper producer, is very anti-deep sea mining, and it's obvious why, because this is a new low-cost source of supply. France, which holds a contract in the Clarion Clipperton Zone where a resource is located, France has actually come out and previously was in favor of deep sea mining. They have their own contracts, which requires them to move into commercial production in deep sea mining within 5 years. Yet they are politically making the stance that deep sea mining should be banned or paused. One of the reasons is that they have nickel mining interests in New Caledonia, and those interests aren't doing too well right now. So France had to support that mining operation to the tune of 60 million euros of bailout support. And then all of a sudden they decided, oh wait, we don't like deep sea mining after all, as it's new competition. for the nickel mining. So look, you can follow the money. A lot of the people who are anti-deep sea mining at the ISA just want to protect their land-based interests. That's okay. Like, we understand that, and we hope the ISA finishes their work at some point. Rather than waiting for the ISA to finish that mining code, we're taking advantage of the existing US seabed mining code, which has been in place since 1989, 5 years before the ISA was ever formed. So this Deep Seabed Hard Mineral Resources Act, which Howard mentioned in the intro, that laid the groundwork for the regulations on deep sea mining. And then NOAA, the National Oceanic and Atmospheric Administration, which sits underneath the U.S. Commerce Department, they put in the regulations to allow commercial production back in 1989. So to your point, well, the ISA has been debating for 14 years. NOAA got their act together in the 80s, and they put forth regulations to allow commercial production. That is the path we're going to take. That path has always been there. We now have a administration that also has the political will to get it done. So rather than saying what's wrong with the ISA, I would focus on what's right with NOAA and the Commerce Department. And there is the bottoms-up ability to do this through the regulations that have been built through careful analysis by the pioneering environmental body in this whole industry, NOAA. They're the ones who started most of this environmental work in the 1970s, and they're the ones who put in place the regulations. They are a perfect regulator for us. Not only can they think commercially, but they can think about the environmental protections that need to be in place. They are suited for this in a way, frankly, that the ISA is not. And in fact, the ISA took the regulations put in place by NOAA and built upon them for the ISA draft mining code, which has never been finished. So we don't think we are going after a regulator, working with a regulator that is in any way unable to do this. In fact, quite the contrary, this is a much better regulator, and we're looking forward to launching that application, in fact, multiple applications to NOAA coming this June.
So, in essence, then, I was going to ask what the main differences in regulational codes are between the ISA and NOAA, but given what you've just said, I guess not that much.
Yeah, look, I will, I'll point to what some legal experts have said about the International Seabed Authority, and I won't say their names, but they're very high up within the ISA. The ISA basically took the mining code of NOAA and tinkered around the edges on it, but it's basically the same rules. So the main difference is the fact that when we put forth our environmental impact statement, there is contemplation in the U.S. mining code that NOAA might do the environmental impact statement themselves. Now, there was actually a adjustment to that rule in 2023 that says a contractor could do it. Either way, we have the work done. So we're presenting it effectively instead of to the ISA, we're putting it on a silver platter for the U.S. to review. And there will be a comment period, there will be stakeholder consultation, all of the best practices that you would expect that we would have otherwise had in the ISA process. We're doing the same thing, just through a different regulator who frankly knows this industry quite well and was a pioneer in this industry. So there's a question about who will ultimately hold the pen on the environmental impact statement. Either way, all of the data is already collected. All the conclusions are quite clear. This can be done in a very low impact way. And we are very confident on the potential approval at some point during 2026.
Okay, so if you look at the tariff standoff that we're currently seeing, and which has resulted in China withholding certain minerals from the US, yeah, I can see why there would be an increased sense of government urgency in the States on this. But currently in the US, there's not much extraction and processing of key minerals. How do you see this changing, or would the US possibly use related parties, or as they do with lithium? I think that it's free trade areas, to process TMC's nodules.
Yeah, look, I think we have to walk before we can run. The fact that the U.S. does have, for example, real deposits of lithium. The U.S. has real deposits of copper. They have deposits of rare earths. What they don't have are deposits in any meaningful way of nickel, cobalt, and manganese that will be economic at current metal prices. So the tariff situation has made clear that there are going to be some winners from a more protectionist trade policy, and we think TMC is a clear winner in that. because what we can bring to the US, let's just take current consumption and then say at that current consumption, how many years do our SEC compliant resource statements represent? For nickel, it's about 81 years. For cobalt, it's 156 years. For manganese, it's over 450 years. So this is not a marginal solution. This is a solution that can completely change the game for U.S. needs for these three metals, all of which are deemed the most critical status from the U.S. Geological Survey, IRENA, and other think tanks. So we feel that the first step is to bring the resource to the U.S. And then as you're doing that, perhaps the government decides, hey, we want to get strategic investment into this industry to eventually allow for the processing of this domestically. And we think the U.S. is going to do that. But in order to do that, the U.S. first has to be clear that they want the material, and then the investment will come to build out the processing. But the processing angle will take time. Refining is a little bit easier. The further downstream industries are a bit easier to build near people's backyards. But again, yeah, the U.S. hasn't built a smelter in a very long time. So to build out that capacity is going to take time. But what we're clear about is that we can bring a major win for this administration, bringing the raw material that allows the U.S. to reindustrialize during this administration.
Right. And then lastly from me, Craig, is what are the milestones and expected timelines for TMC over the next few months that investors should look out for?
Well, look, you've seen a lot of milestones that have moved the stock mostly up on a day like today, not so much, but we're not immune to overall market moves. What you've seen is a very supportive U.S. administration, various comments from the administration, comments in the New York Times from the Commerce Department, where they agree with our legal read about the path forward through the U.S. mining code. That's nice to see. You will see, I think, additional comments from this administration across a lot of different areas. I mean, even Marco Rubio was commenting about how important deep seabed mining is when he was in Jamaica last month. Howard Lutnick, during his confirmation hearing earlier this year, commented on how the U.S. has to move to seafloor mining to augment supplies that would otherwise come from land. So keep on looking for positive statements, not just platitudes, but action from this administration. You can also then expect us to launch applications this quarter with the regulator and lay the groundwork for us moving into commercial production. Finally, at some point this year, you will finally see our pre-feasibility study. I know that we are delayed on that, and it's for very good reason. We could have put out a PFS that was based on the old ISA assumptions, and it could be stale just as quickly as it was issued. Now that we're clearly moving down the U.S. path, there are some assumptions that'll change. Certain costs will be higher. Certain costs will be lower. In fact, the royalty that we would pay, instead of a 7% royalty to the International Seabed Authority, our assumptions on the royalty are far, far smaller based on the existing legislation. So that's a trade-off that's worth making, but we want to make sure that we put that together and get sign-off from our qualified persons who review our pre-feasibility study and then share these new economics with the market. But as Howard laid out, I think some of the math done by Cantor Fitzgerald and some of the other analysts who cover our stock make very clear that our new capital light approach, while it means margins not quite as high as the 60% margin that was assumed on an EBITDA basis in our initial assessment for 2021, yeah, margins go down, but then our CapEx goes down even further. And it's a small, small fraction of what the initial assumption would have been. And that's why you can come up with IRRs that are still very, very robust. And the returns for our shareholders are going to have the same sort of capital overrun risk that any other pre-production miner might have. Again, there's no infrastructure that we have to build. So we can be profitable if metal prices go down. If CapEx goes up a bit, it's CapEx off a very, very small base. There's nothing here to stop this from going forward, except the lack of a regulatory approval that we now feel more confident in. So the train is leaving the station, and we have some of the best ground and the best neighborhood. And the U.S. sees that. I think the U.S. wants to permit that. And the work that we've done positions us very well for this new political reality.
Craig, what's I guess the mining process? We've become familiar over the past number of years on like Bureau of Land Management. We looked at the kind of Lithium America, Stacker Pass, and Ioneer, and different administrations have could speed things up or slow things down, and then various projects have various constituencies against it, whether it could be farmers or there's support for some sage grouse or some plant or, but it's not the NEPA. Well, is it the NEPA rules? Like, what is your process and who, how could, because this is like never been done before, I think. The US, it's under US mining code, but the people who are going to be evaluating you through this permitting process, I guess, are doing it for the first time. So like, what is that process? And yeah, there are like environmental justice considerations in some of the, legislation on the Biden administration. I'm just trying to understand what are like, you should have more certainty as it's a U.S. rather than international code. But who are the people who are going to be evaluating this, and what's the process that make you confident by 2026 that you could get approved?
Yeah, we're confident because we've been talking to many different levels in the U.S. government and Congress, not just Congress, sorry, but the White House. NOAA is the regulator. NOAA will have some NEPA coordination, but we feel very good, especially in our initial consultations with NOAA. And we announced publicly that those are already ongoing. They operate at a pace and at sort of a commercial rationale that's very different from the International Seabed Authority. And that back and forth is all that we're asking for. The good news is we have all the data. We feel that we have all the answers. So it's tough to see anything that could possibly be a showstopper here. There's another consideration, and that is, there's Fast 41, which is a program which allows certain projects to effectively have a SHOPA within the government to help out with a regulator and coordinate across organizations. Now, this is easier in that it's basically NOAA that we are applying with, but still, it's helpful to know that we all have reasonable expectations on timeline, and further, that NOAA and others in the U.S. government recognize there are elements of the review process that perhaps can be truncated. There are certain things that would never be truncated, and that includes a stakeholder consultation period, a public comment period, where everybody's able to air questions and concerns about a project. That's all good process, and we want that process to occur because we want this, to be a 50, 60-year project, and we think it will be. So it's important that we don't just kind of sneak through the door, and there is no rubber stamp here. We're doing it the right way, and that's based on the fact that the data we have is so robust, and based on the collection of data that we've been doing over the course of 23 offshore research campaigns. So in no circumstance, in no accusation could be made which would say that this process is any less robust than what the ISA process is. What we have, however, is a clearer timeline and potential to tighten that time frame even further to ensure a very timely grant. So we feel very good about that 2026 approval. It could depend on, how fast the application review goes. It could also depend on, further statements from the White House on something that, may be deemed very important for U.S. national security. All these metals are very critical for aerospace, defense, infrastructure. So one way or another, we feel it's a matter of time. And this matter of time is quite a bit shorter than what the ISA would have been.
Okay. Which agencies, which departments, I guess, oversee? Is it commerce? This NOAA, is that a commerce department?
Correct. NOAA sits
Okay.
underneath the Department of Commerce.
Okay. So commerce is kind of like leading and Sherpaing it into the Department of the Interior, I guess, which is NEPA,
Nope. No, this would
or
be, well, there's a NEPA consultation, just like
okay.
any other project, but this is mainly owned by Commerce, underneath which sits NOAA. So we feel we have all of the touch points necessary within those departments, and we feel very good about where this is headed.
Okay. I mean, again, I'm just thinking back at various other permitting processes that I've observed where the Fish and Wildlife Service gets involved, or the EPA gets involved, or the Interior gets involved, or or there's some NGO that cares about a bird, a plant, or a NIMBY. Like, this is way offshore. I don't know how far away in between Mexico and Hawaii. There's not. There are no houses there. No, maybe there are some fish, I don't know, 2, 3 miles underground that has some constituency there, but I can't imagine Trump's Commerce Department is going to be overly sensitive to that.
Well, look,
Um,
most of the constituents, if you will, are bacterium. 80% of the biomass in this area, the abyssal seafloor, is bacteria. You're many hundreds of miles, in fact, mostly thousands of miles away from anybody's backyard. So you do raise an interesting point. Who has the jurisdictional ability to, who has the standing to bring suits against something where it's not like, oh, if something goes wrong, here's damage to a water table. If something goes wrong, here's a tailings dam that's 2 miles down the road. This is very far away from anybody's backyard. Lawyers are creative. I do not underestimate the ability of any lawyer to come up with any suit for any reason. That said, we feel very good about the environmental bona fides of the process, as well as the robust nature of how NOAA is approaching this. It's a very professional way, and it makes sense given that they were the pioneers in this industry. And as NOAA reported to the Senate in 1995, all of the environmental concerns about deep sea mining have been answered.
Okay. And I guess the ISA, which has been overseeing this, and you've been doing that process for a long time. And what happens? The U.S. approves it, but the ISA, which America is not a signatory, I guess, to that treaty, but they object. They say, no, I don't know. Do they have any authority, like once it's approved, assuming it's approved by America and you want to make a final investment decision, is there any international authority who can contest it?
The answer is no. Treaties do not apply to countries that do not ratify them. The U.S. never ratified the UN Convention of the Law of the Sea. The U.S. never joined the ISA. As far as the U.S. is concerned, their rules provide a perfectly legal framework for U.S. companies to mine in the high seas. The freedom of the high seas that existed prior to the UN Convention of the Law of the Sea still exists in the mind of the U.S. and the Commerce Department.
Okay. If I could, I know you're pressed for time, but I'm just going back a few years ago. We were all super enthusiastic about nickel. Nickel had a great, trajectory based on class one versus class two, and then the Chinese and the Indonesians figured out a second time how to, I guess, um, produce nickel at low cost through laterites in Indonesia. I haven't, and that's crashed the nickel price for a large number of years. So there's nickel's one of those metals that China dominates through an opaque, or not opaque, but just whatever the supply chain. Just but Indonesia was trying very hard under Biden to get free trade agreement status for nickel and the like. So if you could just update our viewers, on the status of the nickel market and Indonesia versus, your project.
Sure. Look, it's Indonesia versus everybody else. Indonesia's over half of the market. And then when you add in Russian supply, within a couple of years' time, it's expected that Indonesia, with Chinese investment, or Russia, will control 3/4 of that market. That's an untenable situation for the West, and the West knows it. At the same time, BHP was clear last year, about a year ago, actually, to the date, and they said that at the current nickel price, which is about the same as it was a year ago, about half of the nickel producers on an all-in sustaining basis were not making money. And that half was mainly those who are not in Indonesia. TMC, however, given the fact that we have very valuable byproduct credits and higher grade than Indonesia, we can compete with them in a way that nobody else can. So I would love it if Indonesia slowed production, but even more likely, the natural demand growth in this nickel market is going to eclipse the supply growth. And the supply in Indonesia, is going to be hampered by the fact that existing grades are going down. So a lot of the key investment has already been made. Indonesia knows that the grade declines are not good in the long term, but that comes with a host of additional environmental impacts. Again, mining more metal or mining more ore to get less metal than you had before. So we feel very good that no matter where the nickel price goes, we're going to be profitable. In fact, the nickel price could be cut in half versus where it is today, and we would still turn a profit. That's a position that hardly anybody else from the West is in. So it'll all work itself out. But I think what people realize is nickel is a critical metal, as is cobalt and manganese and copper, and we have more of those metals than anybody else.
And it's quite amazing. Your capex relative to your market cap also is not at all high. And with the support of the government and loans and grants and other opportunities there, I think very financeable now at 1.1 billion market cap. So anyhow, I know you got to get to the airport on your way to Japan. So thank you for this comprehensive update, Craig, and look forward to interviewing again. And little while, following what I expect is going to be an interesting couple of months and quarters of news flow.
Appreciate that. Good to see you, Howard and Rodney. Take care. Speak soon.